Cryptocurrency is a virtual currency designed to act as money and a form of payment outside the control of any one person, group, or entity, thus removing the need for third-party involvement in financial transactions. Hello and welcome to our channel. Today we are going to discuss Bitcoin. Bitcoin was introduced to the public in 2009 by an anonymous developer or group of developers using the name Satoshi Nakamoto. It has since become the most well-known cryptocurrency in the world. Its popularity has inspired the development of many other cryptocurrencies. These competitors either attempt to replace it as a payment system or are used as utility or security tokens in other blockchains and emerging financial technologies. In August 2008, the domain name bitcoin.org was registered. Today, at least, this domain is GUARD protected, meaning the identity of the person who registered it is not public information. Cryptocurrencies are part of a blockchain and the network required to power it. A blockchain is a distributed ledger, a shared database that stores data. Data within the blockchain is secured by encryption methods. When a transaction takes place on the blockchain, information from the previous block is copied to a new block with the new data, encrypted, and the transaction is verified by validators, called miners, in the network. When a transaction is verified, a new block is opened. And a Bitcoin is created and given as a reward to the miners who verified the data within the block. They are then free to use it, hold it, or sell it. Data linked between blocks is what led to the ledger being called a blockchain. What is Bitcoin mining? Bitcoin mining is the process of verifying transactions on the Bitcoin blockchain by solving mathematical puzzles, for which miners are rewarded with new Bitcoin for the work done, who reached the solution first. Over time, the reward for mining Bitcoin is reduced. This reward process continues until there are 21 million Bitcoin circulating. Once that number is reached, the Bitcoin reward will cease, and Bitcoin miners will be rewarded through fees paid for the work done. Here's a simplified example to explain the process. Say you ask friends to guess a number between 1 and 100. Your friends don't have to guess the exact number. They just have to be the first to guess a number less than or equal to your number. If you are thinking of the number 19 and a friend comes up with 21, another 55, and yet another 83, they lose because they all guessed more than 19. But if you have 3 friends left, and the next one guesses 16, they win, and the others don't get a chance to guess. The one that guessed 16 was the first to guess a number less than or equal to 19. In this case, the number you chose, 19, represents the target hash the Bitcoin network creates for a block, and the random guesses from your friends are the guesses from the miners. The hash. At the heart of Bitcoin mining is the hash. The hash is a 64-digit hexadecimal number that is the result of sending the information contained in a block through the hashing algorithm. This part of the process takes little time to complete. In fact, you can generate a hash in less than 1 second, pasting some content into an online hash generator. A hash might look like this. If you change one value in that content, like switching one T to an A, the hash changes. This is the encryption method used by Bitcoin to create a block hash. However, decrypting that hash back to the content you pasted is the difficult part. A 64-digit hash can take centuries to decode with modern hardware, so your information would be secured. How do you buy Bitcoin? If you don't want to mine Bitcoin, it can be bought using a cryptocurrency exchange. Most people will not be able to purchase an entire Bitcoin because of its price, but you can buy portions of Bitcoin on these exchanges in fiat currency like US dollars. For example, you can buy Bitcoin on Coinbase by creating an account and funding it. You can fund your account using your bank account, credit card, or debit card. How is Bitcoin used? Bitcoin was initially designed and released as a peer-to-peer payment method. However, its use cases are growing due to its increasing value and competition from other blockchains and cryptocurrencies. To use your Bitcoin, you need to have a cryptocurrency wallet. Cryptocurrency software wallets enable crypto holders to securely store their digital currencies and tokens in one place. Cryptocurrency wallets often also allow users to buy, swap, lend, and earn cryptocurrency, similar to how your bank account lets you access savings and loan products. Some of the cryptocurrency wallets are Electrum, Coinbase Wallet, Exodus Wallet, and Guarda Wallet. Brick-and-mortar stores that accept cryptocurrencies will generally display a sign that says, "Bitcoin accepted here." The transactions can be handled with the requisite hardware terminal or wallet address through QR codes and touchscreen apps. An online business can easily accept Bitcoin by adding this payment option to its other online payment options, credit cards, PayPal, etc. Risks of investing in Bitcoin. Thus, many people purchase Bitcoin for its investment value rather than its ability to act as a medium of exchange. However, the lack of guaranteed value and its digital nature means its purchase and use carry several inherent risks. Many investor alerts have been issued by the Securities and Exchange Commission, the Financial Industry Regulatory Authority, and the Consumer Financial Protection Bureau regarding Bitcoin investing. Regulatory risk. The lack of uniform regulations about Bitcoin, and other virtual currencies, raises questions over their longevity, liquidity, and universality. Security risk. Most individuals who own and use Bitcoin have not acquired their tokens through mining operations. Rather, they buy and sell Bitcoin and other digital currencies on popular online markets, known as cryptocurrency exchanges. Bitcoin exchanges are entirely digital and, as with any virtual system, are at risk from hackers, malware, and operational glitches. Insurance risk. Bitcoin and cryptocurrencies are not insured through the Securities Investor Protection Corporation or the Federal Deposit Insurance Corporation. Fraud risk. Even with the security measures inherent within a blockchain, there are still opportunities for fraudulent activity. Market risk. As with any investment, Bitcoin values can fluctuate. The value of the currency has seen wild swings in price over its short existence. Subject to high-volume buying and selling on exchanges, it is highly sensitive to any newsworthy events. According to the Consumer Financial Protection Bureau, the price of Bitcoin fell by 61% in a single day in 2013, while the one-day price drop record in 2014 was as big as 80%. Bitcoin has a short investing history filled with very volatile prices. Whether it is a good investment depends on your financial profile, investing portfolio, risk tolerance, and investing goals. You should always consult a financial professional for advice before investing in cryptocurrency to ensure it is right for your circumstances. Helping people provide a solid foundation for a more secure financial future. One video at a time. We appreciate you tuning in and hope to see you again soon. Hope you enjoyed this video. Feel free to click on one of our other videos. Do not forget to subscribe to our channel and do hit the bell icon on your way out. See you all next time on Top 5 Hive.